Welcome to AI Unscripted, where I interview some of the very best people who undertake AI technology in different sectors. And today I have Jamie, and Jamie, we're going to talk about AI in insurance. Welcome to the podcast.
Thank you. I'm excited to be here.
Excellent. For those, Jamie, who don't know you, would you mind giving them a little bit of a background, a little bit more about you, please?
Sure. So my name's Jamie Warner. Currently, I work for Plymouth Rock Assurance, which is a small but mighty regional carrier in New England. And I own data science pricing as well as our cloud migration from the business side. I'm always really passionate about trying to help people really understand what data science means. So also at night, I keep doing my job by teaching for Northeastern University. So I science analytics programs as well as a little bit in the HR workforce analytics space because I just really love talking about data and making it easy for people. And I'm particularly excited about this in insurance because there's so many really cool opportunities in insurance to leverage data science, AI technology. And I think a lot of the barrier is just people understanding exactly what it is. So my whole goal is to make it really simple for people so that we can have adoption and lead to greater success and resiliency in the insurance space.
Oh, wow. Wow. That's a heck of an introduction. So here, well, for those who don't know about
Yeah.
AI, data analytics and insurance,
Yeah.
why don't we just talk about some of the potential use cases? Because while you're small and mighty, it is unusual for what I call an insurance broker, normal carrier, not
Mm.
as in commercial life or whatever, to have data science functionality. That excites the life out of me because there's so much opportunity in insurance brokers, as I would call them, or carriers, that it's unreal. So, what are some of the things you're doing without breaking the secrets of your business?
Yeah, I mean, the great thing about data itself is insurers have always had tons and tons of data. The trouble with insurance, and the reason a lot of them have been slower to adopt, is the data is in places that make it very difficult to analyze. So, PDF documents, paper. Until the pandemic, most insurers still used a lot of paper documents, and still some still do. So, when you think about getting the information about a claim or a price or an underwriting decision out of those documents, it's really, really difficult. And that's one of the reasons that I think we're actually going to be on the early adoption curve when we talk about LLMs, like large language models. And those are like your Chat GPT or, your Gemini, all these different models, because those models do a really good job of taking information out of things in different formats. So you have a PDF that's a doctor's note about medical things. It can actually pull out the words from that, even when their handwriting is really bad. And then we can put that in a structured data format so we can build predictive models on it, connect it. So if you think about like the trouble with life insurance and disability insurance, one of the really hard things is that we can't connect all the different medical records easily, right? Not even your doctors do that. If you think about that, you've got some in one system, some in another system. You can't even find them all. So, how are we supposed to get a good picture of health or a good picture of the candidate without being able to connect those things? And so, this is a really exciting, pivotal time for insurance because we're finally getting access to all that rich data that we've had this whole time. That said, we have kind of the original data scientists in insurance and our actuaries, which, if you're not familiar with actuarial, right, those are the people that have forever been setting the tables of what do we think the risk is? How much is it priced? Because the goal of the insurance company at the end of the day is to stay solvent and be able to pay out claims, which just means we have enough money to pay people when bad things happen, right? And so the actuaries have been doing that type of analysis, and a lot of the ones I started with had to do it on paper for hundreds of years to try to understand how much should we charge so that we can pay people when the need arises. And so that data has been kind of the core lifeblood of insurers for years. And now we're just getting to adapt those things. So I do a lot of work in the pricing space where we pull in tons more data to be able to really understand what is the risk here. And the really cool thing now is we're not just looking at what's the risk, but how could we build resilience? How could we prevent the risk? And that's really like a last 5 to 10 years thing. So big transformation.
So, if the actuaries have always been there, and I've
Uh-huh.
I've worked with them, very very clever people.
Yeah.
Their financial wizardry is wonderful. I mean that in a positive sense.
Yeah.
Why do you think it's taken generative AI to get insurers excited? Because a decade ago, when I was working in insurance, and it's an amazing sector, we were doing retention analytics, customer lifetime value, credit, debt analytics. We were looking at simulation analysis, to optimize how many people worked in our contact center. We were looking at, next best action to align a product offer, a customer with an agent or whatever. But most haven't done that despite the data science pedigree.
Yeah.
Why do you think that is?
Well, number one, it's a tricky thing because we're such a highly regulated industry that if you can't explain your analysis really well, you run a lot of risks by implementing it. It's not just the risk of, ooh, we got the numbers a little wrong, or ooh, we were right. It's also the risk of like, we created disparity, we unfairly discriminated. You can face a lot of like legal actions for that. So there's a lot of fear around that. So to get over that, we have to have a business reason. And I think that's something that a lot of data science teams forget is that at the end of the day, insurers care about what's called the combined ratio, which is, it's basically we take in $1 of premium, so we get $1 in. How much of that do we use to pay out our expenses, our losses, all sorts of things like that? And what we forget about in that is when we invest in things like data science and technological advancements, that comes out of there too. And so we have to make sure that we're strategically making them. I know when I started in the insurance industry, I was like, why don't you guys overhaul these systems? They're terrible, right? We can't get anything out of them. And the cost of that we have to consider with, are we still staying solvent today to pay out our claims? And how do we invest? I think the other big thing though is that credibility piece from actuarial. So actuarial historically has a really big context around, are these losses, is this information credible? And even 5 or so years ago, the amount of data we could get on something, we could build a lot of predictive models, which in a marketing type of environment at tech firms, you'll see them using those models and they'll say, these are credible enough for us. Insurers tend to have a different threshold for what they feel comfortable with credibility. And you'll actually see that that's reflected in the way it's been adopted. So auto has had huge adoption of things like telematics and other sorts of data. And that's because with auto, at the end of about a year, we know all of the losses that are going to happen. Almost all of them have been reported. So we can see really quickly, did the model we make work? Right? Were we right? Whereas if you think about something called life insurance, that's more of what we call like a long-tailed line, right? Because it takes forever for the losses to develop. If I build the best predictive model in the world, I'm not going to prove that it works until probably after I'm retired. So that makes it much more challenging to get folks from actuarial and other parts of the business on board with making the investment needed to adopt these things because you can't totally credibly prove that they're better. And that's where I think the trick comes into place and why we've seen so much adoption in auto, a little bit less, but still a lot in home. And then as we start to go into those lines with long-tailed workers' compensation, life, long-term disability, it's a lot harder to get the buy-in. And the data also has a lot more personally identifiable information. So it's a lot more legal risk.
Always the risk, isn't it?
Yeah, always
So
the risk.
if you had a magic wand, and Jamie, let's give you the magic
Yeah.
spending wand and the magic data wand. What's the art of the possible for insurance companies if this combined ratio, I remember it well, didn't exist and you could
Mhm.
spend money wherever you wanted? What would you
Yeah.
do and why would you do it?
Oh, I mean, I would create data connectivity and just labeling of data, right? We have so much data, so much of it is legacy systems, and insurance companies love to acquire other insurance companies. So it's in different formats, it's in different frameworks. And a lot of times, insurers, until California's right to be forgotten law came about, probably about 5 or so years ago, a lot of them didn't actually have any incentive to connect their underwriting system to their claim system. So sometimes it's even hard as a data scientist to connect an underwriting case all the way through to when the person had a claim. And if you think about that, that's really difficult. The other thing is, one of the things that is very challenging because we have a lot of rules around potential collusion in the insurance industry is getting really good data. You don't, when you're doing analysis, just want your data on losses. You want data about your potential customers. But a lot of that data is, again, private health data potentially. Um, Private information that you just can't get. So especially if you're a smaller insurer, you're stuck buying a lot of data and it might not be in the optimal format. So if I could get rid of all of the red tape and combine data across the industry, that would be really powerful. And that wouldn't just help with understanding the environment, but it would also help with a lot of these tools like text analytics. We've had a lot of difficulty in the industry with that because we use so many acronyms and a lot of the base models, right, are trained on general language. They're not trained on all of our weird aggregations and acronyms and code words that we use. And so that makes it much more challenging. And that's something that we could collectively solve really easily, but it's just, you know, not necessarily the top priority. And data's,
No,
again, not what people think about first, right? Every CEO is worried about, are we solvent this year? Can we pay our claims? Are people turning over? Like, data's in there, but it waddles down.
yeah, I wonder whether we large language model RAG insurance terms,
Yeah,
how
I would
many
love that.
parameters that particular item would be.
So many.
Well, what type of models? Assuming now you've got your
Yeah,
data into good shape,
yeah,
it's joined up, you have a sufficient quality data,
mhm,
its veracity is very good.
yes.
What types of things would you do now that generative AI is there? And what would you do knowing AI is there as well, not more narrow AI?
Yeah, I mean, I think the funny part about it is in the pricing space, I would still be building generalized linear models because regulators today, that's what they approve. And so some of the limitations just exist because we've got to upskill and educate as an industry. Even if we have more advanced things, I'll use those more advanced things to get more data for myself, not necessarily change the modeling technique. That said, I think there are so many cool generative AI cases because a lot of what our claims adjusters and our underwriters do is look at really tedious documents, condo documents, homeowners documents, information about the claimant, just pages and pages and pages of documents. And it's hard for them to find the most important thing. And so a lot of the generative AI use cases are actually just bolting them on and having them pull the key information out of those documents and also just training. We have huge turnover in the industry, turnover in the call centers, turnover of claims adjusters, turnover of underwriters. And that's been a huge challenge for our industry. And training those people up takes forever. Where's this document? That's something Gen AI can answer, actually, right? Searching for a document, searching for a trading piece, giving a piece of information. So there's huge gains to be gotten in that space that we really, I think, are going to see positive benefits, and some insurers are already seeing positive benefits of. And those don't necessarily have the same concerning use case as like a pricing model where you have to worry about, some of the other implications. Those tend to be a little bit safer, a little bit easier to adopt use cases.
Yeah, that is the challenge, isn't it? Central regulation, because in Ireland, where I worked in insurance for a long while, you want to do deep learning, put in neural networks, because those were the ones that could provide richer answers. And you went to, and it's no criticism, you just went
Yeah,
to the Central Bank of Ireland. And it wasn't something other people were necessarily doing, as you were
yeah,
mentioning, it was approved models. So I wonder if there's an opportunity there to educate the banks, educate
mhm,
ourselves, educate our industry a little bit more. And when you look at things like the EU Act, so
mhm,
we're coming
yeah,
across to Europe here, actuaries have had to explain things for years. There's no trouble doing that. Now you have to explain your models in Europe as well, depending on a risk category that you're in. That's quite difficult with deep or neural networks when all of a sudden they're not just, hundreds of layers deep, but maybe thousands and maybe beyond that as well with data sets you're not too sure. So it's an interesting space. I have to say I adore the insurance space, having been in it, having seen the data richness of it, and like yourself, Jamie, having come across the convoluted, aged systems that were probably older than I am today, but that's the nature of it. Jamie,
yeah.
look, I think you've got me excited about insurance
Good.
again. What a wonderful place to do some amazing analytics. It changes all the time. It'll continue to change. Some things remain the same. Thank goodness that good analytics is good analytics is good analytics. Jamie, thank you so much for taking the time to interview.
Thank you
I
for
will share.
having me.
Jamie, if people want to find out a little bit more about you, how do they go about doing that?
LinkedIn's probably the easiest. Finding me there.
Fantastic. I will share the details. Enjoy insurance, enjoy teaching, and I'll see you soon.
Thank you.